When I posted the Banknifty review for October 11 to 14, 12 days back, I clearly said if Banknifty is coming out of monthly CPR, our target will be monthly R1, and if Banknifty is coming below monthly CPR, our target will be that swing low. You can go back and check this video for more clarity about our trade plan. And as expected, Banknifty gave a breakout above monthly CPR and our target monthly R1 is easily reached. Hi, this is Gomathi Shankar. Welcome to Banknifty review for the month of October. You all know very well, the first week of October was a tough week. Banknifty was stuck inside this tight range and there were no sufficient trade opportunity for option buyers like me. So we were waiting for this range breakout, and finally this range breakout happened on October 17. Moreover, on October 17, when the range breakout has happened, Banknifty was trading above weekly CPR and previous week high R1 levels. So that is a good opportunity for taking a long position. Let us have a very quick view of last week from October 17 till 21. On 17th, Banknifty came above monthly CPR and Banknifty came above daily CPR as well. So if you have a closer look at Banknifty 5 minutes chart, it came above daily CPR somewhere around here. At the same time, this 5 minutes candles range were broken. So this is a good opportunity for us to initiate long position. You could have taken a long position when this particular range has been broken, and you could have easily booked a profit at R2 levels. So our trade on 17th of October was very successful. And coming back to 18th, we did not get any long and short opportunity because wide CPR day, you can look at the distance between R1 and previous day high. Such a big difference, and this clearly denotes Banknifty is going to be range bound. Even if you have taken a long position here, your stop loss would have been hit and the market would have given you premium decay in the next few candles. So whenever there is a wide CPR and if the market is range bound throughout the day, at least for the first half of the day, you can just avoid trading in the afternoon session. So coming back to the 19th of October, Wednesday, the candles were in a range for a very long time, and finally what happened? Candles came below R1 and previous day high. So this clearly tells us that daily CPR is attracting the candle and you can take a short position with stop loss above R1 and previous day high, and our target is going to be daily CPR. Even if you have missed that entry, taking a short position at R1 and previous day high, considering the market is bullish above monthly CPR, above weekly CPR and above daily CPR, even if you have avoided that short position, you could have gone for a very quick short scalping when the prices came below daily CPR. Alright, and in this case, you should avoid taking long position because Banknifty has already fallen from R2 levels till daily CPR levels. Now trusting the bulls and taking a long position when the candles are coming above daily CPR is not a good idea. Now coming to Thursday, 20th of October, expiry day, Banknifty was trading below S1 and previous day low. So whenever prices are trading below S1 and previous day low, as soon as the market opens, don't take your position. All right, you should wait for few candles and then only you have to decide a trade opportunity. So in this case, the candles are breaking the S2 level around here. You are going for a short position and your stop loss is hit. Your stop loss is going to be above S2 level. Your stop loss is hit, and once again when the day low is getting broken, you can plan for a short trade, but almost the day low was not broken on that particular day. All right, so you should enter only when the day low is broken, not before that. So on this day, Thursday, expiry day, the market was range bound and there is no proper momentum for option buyers. Now coming on Friday. So Friday already Bank Nifty is above monthly CPR and already Bank Nifty is above weekly CPR. Already Bank Nifty is above weekly R2 levels. So these are some signs of bullishness, and Bank Nifty is giving a gap up opening. Now this gap up open is made use of the bulls. Sometimes the market gap ups and the bulls never make use of that gap up opportunity and the market remains sideways. But on this particular day, the market gave a gap up opening and the bulls are taking the prices higher. So as soon as R3 is broken, you can take a long scalping and you can escape at R4 level. Before that, don't take any position. Okay, whenever there is a gap up or gap down opening, wait for a range formation. Based on that range breakout, you can plan your trade. So overall, on that particular week, we got some good opportunities on the long side. Even you are getting another fresh opportunity when R4 is broken, you could have entered, and when the day high is broken repeatedly, you can make use of that long trade as a scalping opportunity. So overall, on Friday and on Monday, we got a very good long opportunity and we would have made some good money. Whereas on Tuesday, the market was range bound, and on Wednesday, we could have done a short scalping, and only on Thursday, our stop loss was hit. Now, coming back to the current week, so current week we had two trading holidays, and this is a short week. We had the market for just 3 days, and even this 3 days were interesting for option buyers. So coming to this Diwali Muhurat trading, the market was range bound, so there is nothing much to discuss about Bank Nifty on that particular day. Now coming back to Tuesday, 25th of October, again you can clearly understand that Bank Nifty, though Bank Nifty is above weekly CPR in hourly chart, and though Bank Nifty is above monthly CPR, one important point which you have to see is this is previous month high, and exactly at previous month high and R1 monthly R1 levels, Bank Nifty started to get stuck. All right, so this is a zone, this is a range. Bank Nifty is unable to break this particular level, and moreover 41,500 is having a strong resistance. You can look at this strong resistance. This has to be broken by Bank Nifty, and Bank Nifty is struggling at that particular level, 41,500, and that is what we saw for the past 4 days. So it is not going to be easy for any option buyer to trade. And as you see, this week Bank Nifty was clearly stuck inside previous week high and R1 level. Now if you check out the previous week, Bank Nifty broke R1 and previous week high, and Bank Nifty went above R2 levels. It came below R2 levels, and once again Bank Nifty came above R2 levels. So this kind of move is needed. Only then we can make some good money as an option buyer. If Bank Nifty is getting stuck inside a specific range, we will not get any good opportunity to make some money. And that's what reflecting in this week market. What happened on Tuesday is the market came above daily CPR, and many people would have gone for a long position, but what you have to understand is look at the size of the first bear candle. So the size of the first bear candle is very strong, a Bahubali bear candle. So trusting the bulls at this point and taking a long position should be avoided. Alright. Now whereas if you look at this previous week, when the candle came above daily CPR, we initiated a long position here. We can initiate a long position here because the entire day high and the candle's range has been broken by the Bahubali bull candle. Whereas if you look at this week, especially on this particular day, 25th of October, this is a strong Bahubali bear candle, and a small bull candle is breaking and coming above daily CPR. It's hard to trust. All right. So we have to focus on taking a short opportunity be considering this first bear candle. So when this S1 and previous day low is broken, you can go for a short opportunity, you can go for a short scalping, and your target will be S2 level. If you see the market is staying inside a range for a very long time, you can exit with a minimum points, at least 10 to 30 points. You have to exit in options. Okay, don't sit in the trade assuming that the market will fall and it will give you a huge money. And after that, again, when the market came above daily CPR, please don't take any long position considering the first bear candle. And those who have taken a long, definitely they would have lost in this fall. So on Tuesday, we should have gone for a short position. Few people would have gone for a long when the candle came above daily CPR. That's absolutely fine. Don't repeat the mistake once again in coming days. On Thursday, what happened? The candles were unable to break 41,500 level. As I said, this 41,500 level is acting as a tough resistance. Candles were not able to go above, and you can plan for a short trade when the candles are coming below R1 and previous day high. I hope you all remember the reversal trick. Even if you are scared of taking a shot at R1 and previous day high reversal, you can just avoid. All right, and if you are confused and if you are not sure about the trade setup, please don't enter. And after entering into a trade, please don't be influenced emotionally. All right, so you could have taken a short position at R1 and previous day high with target daily CPR, and you could have made a easy money on this particular day. Now coming back to Friday. So Friday, a similar kind of opportunity we got. Candles are once again getting rejected at 41,500 levels. So as soon as you see bear candles coming out, you can go for a quick short scalping. Now here, though there is a strong bull candle, and if you are afraid to take a short position, you can reduce your quantity size. This is where position sizing comes into play. Go for a short, make some quick scalping till daily CPR, and you exit. And when the S1 and previous day low is getting broken, once again you are going to take a short position with stop loss above S1 and previous day low, and your target is going to be S2. Even you can plan for S1, S2 50% as your target, and your target is done today. And when the market breaks S2 level, once again you can re-enter with stop loss above S2, or you can plan S1, S2 50% as your stop loss, and you can exit somewhere around S2, S3 or even S3 levels. So overall today, this particular week, we got only limited opportunities, and the market is struggling to cross this imaginary 41,500 levels. Hopefully we can expect Banknifty to break this level in coming days and coming weeks. Now let us quickly look at the trade plan for the upcoming week as well as for the upcoming month. So Banknifty is just struggling around 41,500 levels, imaginary level, a round off level, and there is a tough resistance as well, somewhere around 41,500. So this resistance has to be broken by Banknifty. And if we look at a monthly chart, you can clearly see there is a resistance around 41,800. So this 41,800 resistance also needs to be broken, because if Banknifty goes above 41,500, this 41,800 all-time high levels will be giving resistance. So we want 41,800 also to be broken by Banknifty for bulls to take control. And moreover, if we look at the weekly chart, we can clearly see a cup and handle kind of pattern. We can expect Banknifty to break this resistance level. If this resistance level is broken, we can expect some good bullish rally. Or if Banknifty is weak, we can expect another handle to form, another compression will happen, and that compression will not go beyond 50% level. So this is the 50% level. So even if Banknifty tries to come down for a pullback, it may not go below this 50% level. And as of now, looking at the weekly chart and monthly chart, clearly bulls are having some upper hand, because even this current week we got a small bear candle only, whereas the previous 3 weeks we got some good strong candles, whereas now we are having a small bear candle only. So that is not going to bother too much. And in daily chart, as we saw in daily chart also, Bank Nifty is coming for a pullback. Now, last time what happened, Bank Nifty came down, it went for a pullback. We expected a fall to happen, but what happened? Bank Nifty did not fall. It started to consolidate around that particular area. You can clearly see the consolidation which happened for nearly 5 days. And after the consolidation, what happened? Bank Nifty started to give a rally. Now, once again, we can expect a similar kind of pullback or a consolidation. And fast forward, we can expect Bank Nifty to break all-time high levels, and 43,000, 44,000, 45,000 levels we can expect in coming weeks and months. This is going to be a very important support level for Bank Nifty. And if we come towards the weekly chart, as per weekly chart, this is going to be a very important support level for Bank Nifty. And if we come towards the daily chart, as per daily chart, maybe somewhere around here, considering the 50 percentage level, this resistance and this supports 50 percentage level, we can expect Bank Nifty not to fall beyond this 50 percentage level. So maybe Bank Nifty can come for a pullback, but it should not come below this 50 percentage level, and we want Bank Nifty to go up further. Only if this support level is broken, we have to consider bears have taken control, and we have to trust the bearish trend. Until then, you no need to focus on bearish trend at all right, and you can look for long opportunities. Even if you are going for a short opportunity in hourly chart based on monthly CPR or based on weekly CPR, what I would tell is go for a short scalping only, and don't sit in the trade for a very long time. So Bank Nifty is still bullish. Let's hope for a all-time high. Alright guys, thanks for watching my Bank Nifty review video. If you like this video, you can share it to your friends, and you can join my Telegram channel for more chart analysis and stock selection and live market trade plan in Bank Nifty. Thank you. Together we grow as a price action trading community. Bye.